Hey guys, Steve here from the turtlefollower.com with the weekend update for the week of Saturday, October 4th. So we're looking at the S&P futures. We talked last week, actually not on the weekend update because we didn't have one, but we've been talking about the idea of the market coming into that 50-day moving average, potentially bouncing. That didn't happen. What happened instead was we came all the way back down to trendline support. Now, depending on which trend line you're going to be using, we basically came into both of them. They kind of crisscrossed at the same time. You could see here we're using the low from 2.5 and the low from 8.8, and we come right in through the low that we just had. And the same if we use the low from 4.14 and 8.8, again, right into that same low. So right now we're basically breaking down from this small consolidation, so we're actually going to take that off. And you can see what's happening now instead is we're stuck under this downtrend line. Now, while we did close above it, it is really about how you draw the line, if you want to draw it like that, say. So what we did is we bounced off that trend line, and I figured this was going to lead to some kind of reversal. We had sold off 8 of the last 10 days. I figured at that point we were going to have some kind of bounce. So that was why we kind of gave those marginal breaks in Disney and GD another chance. We got the nice pop back today, yesterday. But look at where it came to, all right? Look at where we ended right here, which is the intersection of the 50-day and this downtrend line. So now the next question is, how strong is the market going to be? Is it going to be this V-shaped reversal that we've seen so many times, or is it now going to turn around, reverse, and break down below this trend line? So the next few days are very critical. I think, from what's happened in the past that this trend line has held, my personal feeling is we break back to the upside, break back above the 50-day. But again, we are under this trend line and we are under the 50-day moving average, so those are providing some resistance. And you can see what's happening now with the 20-day is we're coming back. The 20 days actually moving down, and the 50 days moving sideways essentially. So not necessarily a great setup for having the uptrend remain intact, but for right now, let's see what we can do if we can get back over that downtrend line. If we look at the NASDAQ futures, again, all the indices were up pretty much 1%. It's a little bit of a different story here, right? So we came into these previous highs back from the end of July. That's where we bounced. We still remained above that. We closed above that, even though we had this really wicked tail here. Still closed above it on Thursday. Friday we came in. We did close pretty much right at the 50-day moving average, and we touched the backside of this trend line. There is still a downtrend line intact in NASDAQ as well. So again, let's see how this reacts, if we can break that downtrend line or not. This is a much stronger setup because we're pretty much right at the 50-day, above the 50-day, where the S&P is bouncing off of it. And the Dow was up almost 200 points. And this is the strongest of the three right now. Still, again, downtrend line still intact. We've talked about this in the past, how these seem like very controlled pullbacks. They're not something like this where we saw these big candles that we were just gapping away. They're very methodical. Same with this. All right, very methodical coming back in. Now, obviously, this one's a little bit steeper and more. There was more selling in it, but still, looking at it, it seems very methodical to me. So, above the 50-day, let's see if we can get back above that downtrend line. But you can see here, this trend line is still intact. All right, and if you look at these weekly charts, if you missed the strategy session from Thursday night, this is something I'm kind of exploring. I saw some posts about it on Twitter, and I thought it was quite interesting. But this is called a linear regression channel. So essentially what it means is that price reverts to the mean. You could see here on the Dow futures, this dashed line right in the middle. Right, that's the average for whatever the setting is. I forget what I have it set at. But whatever the setting is, this is the mean reversion. So meaning that if a stock moves too far away, it's always going to revert back to the mean. Again, we don't necessarily believe that. We can believe that strong stocks can keep going. But I'm just curious how this plays out in our trading. So the first lighter line is the first standard deviation, and the second line here, the heavier line, is the second standard deviation, meaning about 65% of the trading will happen between the lighter lines, and 95% of the trading will happen in these heavier lines. All right, so you can see there's very little times that the stocks actually break out from this channel. All right, so we're using a 3-year weekly chart here, and there was one time that we moved outside of that channel. And essentially what it says is that, you know, once you pretty much start getting into this lower band between this lighter and heavier line, that stocks are oversold, and vice versa. All right, when you get up here, they're overbought. So I'm just curious how it plays out. I'm still going to continue to make the trades and put the trades on as I normally would. But, you know, there are a couple stocks that are pushing the upper limits of these ranges where they're in overbought conditions, and we're trying to take them long. And I'm just curious how that's going to work out. So, you know, this is an educational blog. Of course, we do trade it as if it was a real portfolio. But, you know, the whole point of this is to have some education behind it as well. So I figured there's no better time to take a look at this and see if it actually makes a difference. All right, so let's get into our positions real quick. All right, so let's take a quick look at our model portfolio. So you could see we have the positions here, and we've closed out FIS this week, 10-1, and we took $125 out of that trade. I think, to be honest, we were supposed to close RSG. Looking at the chart, I think I was supposed to close it, and I completely forgot. So that's my bad. Sometimes it happens, but we've actually had a rally since we exited. So what I'll do is I'll set a stop right here for this most recent low, and if it happens to if it happens to break down below that, then we will get out. No big deal. It's just I think I completely spaced out on that one. So 37.86 will be the stop on RSG. But anyway, getting back to the model portfolio, we exited FIS this week, took $125, 0.56% or a 0.15 R out of the trade. You can see then we have 7 remaining positions open. Of those, 5 are green, 2 are red. You can see even though we had this major downswing in the past 10 days, we only have our red positions are only down 0.17 and 0.26%, Disney and RSG. As far as our most profitable positions, those would be LUV and ADM, up 11.78 and 9.62% respectively. And right now we've realized a negative $2,000 loss. However, the model portfolio is back above its $100,000 initial investment, and that includes commission costs. So we are showing a profit for the year at this point, although minimal. Right now, $2,500 in open profit, so we're probably about $500 in unrealized profits. Right now, closed win percent is very poor, down 27%. But these 3 columns: closed win rate, closed average R, and expectancy. The more trades that we put in, the more accurate this is going to get. So usually around 30 or 40 trades is where this starts to at least be somewhat representative. So we're not there yet. You could see our allocation in the last week has dropped significantly in the last 2 weeks from, it was I think 150% when we were fully invested, and now we're at 87. So, you know, definitely take a look at this on the blog if you want to get some more information off of it. But right now, this just helps us keep our risk and everything in order. Right now, we're risking about $6,000 in open risk. All right, so let's get into the positions themselves. Apple, you know, still in that consolidation, was actually down on Friday, but it was up on Thursday. So, you know, right now it seems like there's not really a direction. It was up on a down day and down on an up day. We're just waiting for that break of 98 to exit the trade. ADM Okay, this one is setting up again. It looks like it's nice small consolidation. Right now we're using 49.08 as our stop. Eventually, if we can get that breakout, an eventual move over 52, we'll be able to raise that stop level to this 50.38 level. You could see here what's happening on the linear regression channel is we're actually coming into some overbought conditions. All right, so I'm curious to see if this how this plays out. Again, for me, it's just as much of a learning experience as it's going to be for you guys. But for right now, the trend is definitely higher in ADM. I'm just curious how we progress from here. Disney up 1.91%. Again, we were supposed to exit this on Friday morning. I said it was a minimal break, this significant reversal. We came now right back into, similar to the S&P, into this downtrend and into the 50-day moving average. So the next few days will be significant on this one. All right, we're basically looking for a break of this downtrend line and a resumption of the uptrend, or at least a test of this $91 level. Again, looking at the linear regression channel, this one instead was nearing oversold conditions and bounced off of it. Expedia up 2.52, just continues to move sideways, continues to hold up well. Right now we're still using 82.51 as our stop level. And let's see what happens if we can finally get that breakout this week over 88. GD was another one we were supposed to exit Friday morning. We did not, and it was up 1.43. You could see basically right back above the 50-day moving average. I'm not sure if we would consider this a test of the trend line or not, but for right now, it is remaining intact, and we'll see where we go. I would say at this point, we're probably going to be moving our stop down if this ends up being low, minimally just to this close. So we would move it from 122.54 to 121.75. But let's see, you could see the uptrend very much intact. All right here on the weekly chart. And again, look at what happened here at the high, 130.17. We touched that second standard deviation move right in here, and we've reversed from there. So, I keep saying it, but I'm just curious how this all plays out. Same thing on LUV. Look at what happened. We touched this second standard deviation move and have since pulled back. Uptrend again on LUV is very much intact. If you're looking here at the weekly chart, and to be honest, if you look at the weekly chart, this shows that you have some more room to the downside. All right, maybe you have till $30, and we're using 29. So, we'll see. I still want to again keep our process the same. So for right now, you can see we came in on Thursday right to the 50-day moving average, bounced on Friday, closed somewhat above this trend line. Now we need to see some more upside momentum, and hopefully then we'll be able to actually move our stop to this 31.78 with a couple good reference points. Looks like earnings are coming up on the 23rd. I think the other one that had earnings coming up soon was Disney, but that's not until actually November. All right, so that's it for the positions. As far as the watch list goes, a lot of the same stuff that we've had for the past couple weeks. All right, so AA, Alcoa. All right, so what happened here again, and this will be the last time I talk about it, I promise. Uptrend was very much intact. We came in, we hit second standard deviation, pulled back a little bit, tried to break out again, hit it again, and now broke down below that trend line. All right, so it did break this 15.59. All right, so we're still holding on to this. This one reports, I think it's Wednesday. So let's see if that can get some more action to the upside. If not, this may be a good short candidate, to be honest with you. Looking at it, if this broke down a little further, you could probably go in, short it, and put your stop here, 16.33, knowing that you're in oversold territory. And if this actual reversion to the mean is accurate, then maybe it needs to come back into this $12 or $13 range. That's up to you. I won't be taking that trade. ABC continues to just move sideways, still waiting on that break over 78. Allstate continues to move sideways. You can see the 50-day moving average curling below. Break over 62.35. CCI is a new one. All right, CCI was one that we probably should have had on the list last week, but I had missed because I was out last weekend. But you can see what's happening here. We actually are having this breakout. So what I'll do is if we can stay above this 80.66 level on Monday, then we will enter a position in CCI with a closing stop below 78, we'll call it, just to make it nice and round, $78. And we have earnings on the 22nd, so we're under our 2-week threshold for entering in earnings. And looking at the weekly chart, you can see it's broken out from this long-term sideways movement, moved up higher, again consolidated, which is now on the daily, and is now breaking out again. So this could be a good entry point for CCI. So again, that one will determine on Monday if we can get that close above 80.66, if we will enter or not. Costco, another one, looks good. All right, this one has had a nice run. All right, you can see it came in off this oversold levels down here, moved higher, and is now consolidating. This one has earnings on the 8th. All right, so this is one of the first to report. So there's probably not going to be a position, or there will not be a position taken before earnings, but we'll see what happens after earnings. But for right now, I mean, this is still very much extended above the 50-day moving average, so similar to a couple other stocks like Home Depot and a couple of the railroads that we had looked at way back when. We want to see this move sideways a little bit longer to set up a great entry. CTL, this one still waiting on the break over 41.31. Again, if you look at their linear regression channel, though, we are pushing into oversold, and the trend is actually down on the weekly chart. So again, we'll see if we can get that break over 41.31. I still want to take it long. I think it's still working long. Yes, the 3-year trend is down, but we are actually breaking almost to new highs. So we'll see how it happens with CTL. DPS is one that I've wanted to try and get in for a while. It's been tough to enter. We probably should have had an entry back in here in the middle of September. We missed that one. So right now, if this can move sideways a little longer, you can see the trend is very much up, and we're waiting on that break over 65.25. Earnings are on the 22nd, so it needs to happen quickly. Estee Lauder has just continued to move sideways. You know, we're still waiting on that break over 77. Home Depot's getting close. All right, we've had it on for a while. Home Depot's getting very close to a good entry. We need that break over 93.50. I think at this point we could potentially put our stop here at 88, and in the next few days that 50-day moving average should be above that level. So Home Depot is definitely one that is on the watch list. Intel breaking below the 50-day moving average, but still inside this consolidation. Again, looking at this linear regression channel, we are pushing to the second standard deviation and now reversing from it. So maybe that is the top in Intel. JWN moving sideways close to a breakout over 70.50 would be the entry on that, and you could see as it went and moved higher to the second standard deviation, it is now just moved sideways and reverted to the mean of the range. Kroger, this one's close, all right, very close. Probably could have taken an entry if we wanted to. I am waiting for Monday to happen. The reason for that, two things, is first, this is a minimal break in my opinion on a very strong day. Second, the stock market has, the last few weeks that it's gone up 1%, it's been down on Mondays. So I want to make sure that we are actually getting in at a good spot. KSU up 2.92%. You know, this one's still waiting on the break. Or actually, no, this is a new position. I'm sorry. KSU, so trend line upwards. All right. Nice consolidation here. We've had a couple tests of this low at 116 and the high at 121.70. Right now we're waiting on the break over 121.70. Again, earnings are coming up in the next 2 weeks, so that one may not happen yet. LEG still moving sideways. Lowe's, similar to Home Depot. moving sideways. This one, though, is definitely very much above the 50-day moving average. So, I think it was Costco that we want to see this one move sideways a little bit longer to allow that 50-day moving average to catch up. Again, we are consolidating right in the middle of the range on the weekly chart. MJN continues to move sideways. Merck had a little breakdown, quickly recovered back into the range. So this one, we'll see. This one basically broke out from a weekly box, which was back in here. Let's see if we can show you that. Here was your weekly consolidation. It had broken out from that, and now we were waiting on the setup on the daily, as we always do. Microsoft, another new one to the list. Probably should have been on this one a lot sooner, but trend line is up, consolidating right above the 50-day. We are pushing into oversold or overbought conditions, though, on the daily. NSC moving sideways. This one looks like it may set up for us. Trend line, however, is way down here, so we need to obviously manage our stop accordingly. And earnings are coming up in the next week or 2 weeks. Rubbermaid. Right, so this one, trend line is up. 50-day moving average is moving up nicely. And here's the consolidation with your support at 34 and your resistance at 35. So we'd need to see that breakout there. PepsiCo is still on the list, setting up well. Still waiting on the break over 93.80. Sempra Energy, one of the first energy names that we've added. This one we're waiting on the break over 107. Okay, you can see the setup is very nice. Trend has been up for almost 3 years between this whole range. So I'm waiting on that break over 107. Texas Instruments down 0.04%. Continues to just move sideways, waiting for that breakout. UNH broke down, tested the 50-day, quickly regained back into consolidation. Earnings are coming up on the 16th, so most likely no position there. UMP, this one's one we've been trying to get into for a while. We had this consolidation here that we got a breakdown and a quick V-shaped reversal. So this one now we're waiting on the break over 110. Again, looking at the 3-year weekly chart, we're right in that overbought conditions. So I'm curious to see how that plays out. WellPoint, again, setting up on a break over 125. WM, new position on the watch list. Uptrends intact. Moving sideways. The longer this moves sideways and allows that 50-day to catch up, the better off that's going to be. Waiting for a breakout over 48 to make it nice. And WMB held the bottom of this resistance or consolidation. Now let's see if we can reverse and push into the $59 level and through it. Again, looking at the linear regression channel, we are in overbought conditions. So that's our weekend update for this week, guys. Hope you enjoyed it. Hope this helps you with your trading. Please make sure to hit that like button, subscribe to the YouTube channel and the nightly recap. Leave any comments or questions below. Maybe there's some additions that you find that you want to add to the list. So I'd appreciate it if you add them for everybody to see. And then I'll also add them to my list and we'll watch it together. So definitely leave some of those below. And we'll see you on Monday. Have a great night, guys. Bye.